we are going to take another look at our grain market activity here. We'll start with this corn market. And let's go ahead and take a look at what's going on with the corn trade right now. We have December corn now down 5 3/4 cents. We're at 671.5 per bushel, and that would put us about 8.5 cents from our earlier low. Now let's take a look at our soybean trade here today, and currently on the soybeans we have that November contract now 6 cents higher. We're at 14.54.5, and we have January now trading 5.5 cents higher. It's trading at 14.60 3/4. And let's take a look at what's going on in our wheat market right now. We'll start with the Chicago wheat. And in Chicago, wow, what a drop we're seeing here. We're down 35 cents at 8.24 3/4. We have the March contract down 34 3/4 cents. New crop July actually down 32 cents right now. So big drops in the wheat complex. Let's take a look at our Kansas City market here. And right now you have that December contract 32.5 lower at 9.02 3/4. And March down 32.5 cents here. Now on the spring wheat trade in Minneapolis, you have December going down 28 1/4 cents at 9.10.5, and you have the March down 26.5. I want to find out why we have so much pressure in this wheat market here and ask our guest in-house. We have Chris Swift here. He's with Swift Trading, based here in Nashville. Okay, what's the story on this wheat market here? Do you know?
I wish I knew. I think it probably happens to be more European conflict than anything. We always know that Russia has wheat to sell and can undercut the market at any given time. I think that, and what probably was most interesting is how beneficial the same weather towards the corn harvest is detrimental towards the wheat seeding. So we looked at the drought patterns on it and noticed that we just are not getting the kind of moisture we need to get that seed being able to germinate.
Mm-hmm. And it's going to be that way for a while.
Several more days, looks like, yeah.
All right, so let's look at South America here for a little bit. Mm-hmm. The odds are, the Climate Prediction Center said they give it, I think, a 91% chance of La Nina remaining in effect through the end of the year, into January, I believe. Doesn't the trade think that's got to be a little bit nerve-wracking for Argentina production especially? Don't they normally have an adverse effect from La Nina down there?
They do, and they can. And we saw beans put $1 on last week, so we thought that was kind of interesting that they put $1 on, have not really been able to take that off again. And I think it's a couple of combinations between that and here in the U.S. We're hearing that even here in the U.S. the drought impacted a few of the beans, and of course we saw USDA cut the yield by a bushel per acre on the last WASDE report. So not everything is just quite as 100% is what it was, as the year was growing.
All right, now let's talk about what's going on with the corn and soybean trade right now. We did have the overnight sale on the soybeans. Corn, we've only had one decent sale for quite a while, right? As far as the overnight flash sales.
We have.
How far behind are we right now?
Not too far behind, but we could probably use some catching up before the end of the year. Right now, the harvest pressure is probably just making it a little bit soft out there, and without that export demand and the dollar really, really strong, doesn't help anything with that export situation. So I think kind of right now we're just in a lull of got plenty of harvest weather to get in front of us, and still got this kind of lull in the demand right now.
Well, according to what Christina was just saying here on the weather update a little bit ago, we have really nothing to hold us back at all.
No, I think the corn will probably be literally historical being harvested as much as long as we can keep it moving now. We talked earlier about the trains and the barge systems, and the really dry weather impacts the river systems as well. They get down too low and they can't run barges in some areas. So all of it's not just because you've got a great big crop doesn't mean you actually get it to where it belongs.
And we don't have that rail strike issue resolved just yet, do we?
Not yet.
That's something to keep in mind, too. All right, we'll pause right here. We'll come back and we'll take a look at how we're opening up in our livestock trade and see how it's going so far when we come back. We're back. Let's take a look at our livestock trade right now, and our quotes are provided by Bar Chart on the live cattle board. We are still higher across the board. The October up 40 cents. You have it at 145.90. December not moving too much, though. We're up a dime at 151.07. And all the deferred contracts, we'll call them about 20 to 40 cents higher, at least for the time being. In the feeder cattle market here today, we are higher here across the board. October up 80 now at 182.05, and November up 77 at 183.52. Pretty solid gains, I would say, all across the feeder cattle board. And on the lean hog trade, here we're a little lower, led lower by the nearby October contract. It's down 55 cents right now. We're at 96.35, about in the middle of our trading range today. That trading range, by the way, is 70 cents wide. On December lean hogs, we're now down 30 cents at 87.67. And as I mentioned, the nearbys have the most weakness. That would seem to indicate maybe a little bear spreading, perhaps, there. Chris, what do you think about this lean hog board?
A little bit. It's the index probably more than anything that has been taking it down. The index has been just one day after the other trading lower, and it finally converts the basis down to less than about $6. So we're going into expiration in a couple of weeks for the October contract, and here we are having met the basis. So I don't see where there's much more, really left to it one way or the other, unless we start to see something in our export market.
Doesn't that lean hog trade seem like it's been kind of bumping its head against resistance all the time?
It has. It's been very volatile. I mean, we have had multiple $2 and $3 days, both up and down, sometimes in the same day. So it hasn't really gone anywhere when you look at, the direction of it, but still very volatile within this price range.
What about when you look at a chart on live cattle? Here again, it seems like it's just kind of getting into resistance levels here for the time being anyway.
Well, it's kind of tough right now to get cattle prices to move higher. We've got the consumer impacted by every inflationary factor that there is. We're still producing the same amount of beef. We're only 0.8% lower year over year in total beef production. And now with the drought persisting, we're most likely going to continue to put more and more lightweight animals on feed or put them into a preconditioning lot, which the next step will be on feed.
I want to take a look at the Dow, see what's going on over here in the equity markets today. And right now, about as flat as you can be, Chris. Looks like it's only moving about 7 points higher at 30,929. And September U.S. dollar index futures, now they are higher by about 300 points. Back up above 110 at 110.045. Well, thanks again for joining us.
Always a pleasure.
To it.
Yes, sir.
Chris Swift of Swift Trading with us here in Nashville. Janet, back to you.